Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the week of September 5th through September 9th. And we'll talk about how do we make money trading in the worst month for investing, which is September. We'll talk about why September is called the worst month for investing. And then if you stick around to the end of the video, the end of our weekly trading game plan part one, we'll talk about strategies for how we can make money trading in this September, in the worst month for investing, or in any type of stock market. So again, stick around to the end of the video. We'll do our market analysis. We'll look at how the markets performed, all the data we got, the news, etc., how it affects the markets, and how it affects our trading strategy going forward for the week of September 5th through September 9th. And then again, we'll talk about how our strategies for making money trading in this September, the worst month, what they call the worst month for investing. So stick around and we'll get started. Okay, here's our notes for this week's weekly trading game plan part one. It's a Google document. Again, you can find these notes, these Google document notes for our weekly trading game plans in the trading game plans public folder on the Google Drive. You can find a link to this public Google Drive folder with our weekly trading game plan notes in the description box below. Originally, I was considering putting an explanation of why people say September is the worst month for trading, and which includes explanation of what they call the September effect or the September swoon as part of this video, but in consideration of your time, and given that some of our BeachBum traders are familiar with these terms, the September effect, why people say September is the worst month for investing, and the term September swoon, and the fact that we talked about this last year at this time. I put this in a separate video. I have the link to this video in the notes here. I'll also put it in the description box below probably. It's currently unlisted and under construction, so please be aware we will be publishing it as a standalone video as soon as we're able, but again, in consideration of your time, I put that as a separate video. So if you're not familiar with why people say September is the worst month for investing, or the term September effect or September swoon, or how those affect your trading or investing and strategies, we'll talk about the strategies, how to make money trading in September in the worst month for investing, given the September effect, September swoon, at the end of this video. So please stick around. If you're not familiar with these terms and why September is the worst month for investing, I'd highly recommend that you go view this video. Okay, let's start our market analysis, etc., strategizing in FinViz. We'll go to the FinViz homepage. You can find this link in the notes and in the description box below. We can see, Monday or Friday was pretty volatile. The market started up, then they declined, ended up mostly down. NASDAQ taking the biggest hit, over 1.3% down. We can see more decliners than advancers, many new lows. Now the majority of stocks are now again below their 50-day moving average, and they are still well below their 200-day moving average. And now the overall sentiment tendency is negative, bearish. So we've been saying for a long time we're in a bear market since the beginning of the year. We had that brief bull rally in a bear market, and now we're back in bearish territory again in a downtrending bearish market. So we've been talking about strategies for how to trade, how to make money in bear markets since the beginning of the year. So please refer back to those previous videos as well as to how we can make money in a bear market or in any kind of market. So we'll focus on that today. So again, we can see the heat map, almost everything was red except for energy. Energy had some positive trends that we'll look at. We see some of the news, stock reverse gains, finished down, ends week on a down note as jobs report gains fade. and then down. So if we quickly look at the futures, oil was up, it took a dip, it spiked up at the end of the day. Natural gas went up around noon and then went flat. Gold and silver had a early rally and then declined late in the day. It looks like they're bouncing back up. And then we see all the indices were down. Interesting, the euro's now again below parity with the dollar. So uh, a euro is worth now less than $1 again. Yen's declining as well. And then we see this very smile-oriented inverted yield curves, and we see the yields actually did go down some, and we'll look at that in the futures as well in a minute. Okay, if we look at each of the major indices in FinViz, here's the SPY, S&P 500. So we can see it previously tested the upper trend line of its downward channel, failed, dipped down. Then you can see it failed at its 20-day moving average, trended back down. We can see now it's broken down below its 50-day moving average. We can see it made a late day test of that 50-day moving average, failed, and so all the indications are for a downward trend, a continuing downward trend. So if we zoom out to the weekly, again, we see the test of the 200-day moving average, which we talked about last week, and then we see the sharp decline. We see it's now below the 50-day. It tested, failed. So all indications are for downward momentum, downward trend, bear market, etc., which again is not surprising. It failed on this test of the 50-day, and that's what we were kind of watching for, if that was going to succeed. That failed. So now, again, it has a severe downward momentum, a downward trend. So again, we're still in a bearish market, and we should trade accordingly. If we look at the Qs for the NASDAQ, again, very similar. It didn't actually even make a test of the 200-day moving average, and downtrended with the other markets. Tested, briefly the 50-day moving average, failed, and is downtrending as well. So if we look at the Dow, we're gonna, we see here, like the S&P, it briefly tested the 200-day moving average, failed, went down to the 50, briefly tested that, failed, and now it's dropping below the 50-day moving average. It tested, briefly failed, and so again has significant downward momentum. Russell, and they all very similar. They all went and tested their 200-day moving average, failed, broke down, and now they've broken down below their 50. So again, all the major indices have a significant downward pressure, downward momentum. We look at the VIX. Surprisingly, the VIX, it briefly popped up a little bit. It's now sitting in the 25 range, but really didn't, we didn't have one of these severe volatility reactions. That part of that may be because of what they call the summer stock market doldrums. So we're just coming off the summer, and so we got a reaction. This is all again reaction to the Fed Jackson Hole fallout that we talked about last week. All this week was just mostly continuing on that theme, that fallout from Jackson Hole, from the Powell speech, and so we see a little elevated volatility, but again, nothing significant, and we can see it slowly retracing, trending down. So we'll talk about future events that may cause increased volatility and how we can prepare for those in a minute. So now let's look at the groups, the sectors, the industries, etc. in FinViz. And again, we have previous videos that explain in more detail how to use this groups tab in FinViz, how to find various stocks using the groups tab. So we would refer you to those previous videos. If you're not familiar with how to benefit and use the FinViz Groups tab. So if we go to the Groups tab in FinViz, we look at the sectors. We see on Friday, the only positive ones were energy, basic materials. Again, the sector rotation that we've been talking about for some period of time continues, both intraday and intraday. So we see they were the best performing on Friday. The worst performing was communication services, technology, etc. For the week, we see, basic materials actually was quite negative. Technology, again, very negative. We saw utilities had a little bit of a run. It was the the best house in the worst neighborhood, as they say, for the week. But we see for the month, energy, utilities, and then basic materials and defensive. We've seen this trend for quite some period of time, and again for the quarter. So again, energy, basic materials, they tend to be rotating in and out of those, consumer defensives, etc. They keep trying to run technology, which in the current market environments, those rallies have not been sustainable or not sustainable. So if we look at the industry breakdown very quickly for the day, again, we're going to see a lot of energy, a lot of basic materials. Silver, gold had a nice recovery rally bounce on Friday. Again, we see a lot of oil, coal, etc., which had been beaten down during the week. We see the worst performing, some luxury goods, some gaming, etc., technology. For the week, we saw uranium really had a major run for the week. There wasn't much else that was very positive for the week. The worst for the week, some basic materials, copper, aluminum, etc., coal. But for the month, again, it's energy, uranium, coal, etc., some basic materials. And the worst performers, silver had been beaten down severely and had a significant bounce on Friday. Looks like a recovery, turned back up. Again, gaming, semiconductors. We've been talking about the downturn in semiconductors due to the glut, poor guidance, etc. So again, when we get to our strategies, we'll look at, and the futures, we'll look at possible opportunities for playing these various industries. Okay, now let's discuss some of the economic data that we got from last week and how it impacted the markets, and then we'll also talk about upcoming economic data for next week. So if we go through last week, just some highlights. On Tuesday, we got some housing. We can see how housing continues to roll over. Prices are declining. We got this consumer confidence, which was positive. So we're seeing data that says the consumer confidence is improving. We got the open job openings for July, which was better than expected. So that says there's still a lot of open jobs. And we're going to see in much of this data, it says the job market's still strong. And again, that fuels the concerns in the market that the Fed can continue to be aggressive, continue to be hawkish, continue to raise rates aggressively, and therefore that contributed obviously to the downtrend throughout the week. So we see mortgages applications are way down. Again, all indications are the housing market continues to decline. It's in a recession. It's continuing to decline. Again, we saw non-farm employment was actually, negative, a lot worse than expected. The PMI was pretty much in line, and then we saw crude oil inventories, a major drawdown on Wednesday, and that contributes to high oil prices, but oil still declined in general. So it's been testing the $90 mark and failing, tending down from the $90 mark. So this didn't really cause a major spike, which was a little surprising. Gasoline inventories also were down. So again, crude oil inventories were down much more than expected, but again, it didn't really cause a spike in oil prices. Another thing that was commented on Wednesday, this is one of the Federal Reserve officials, Mester, sees Fed rates going to 4% by the end of the year. So again, we've talked about that. Expect rising interest rates, about 4% by the end of the year. Exactly how they get to that, is it a couple 75s, couple 50s, etc. It's not really that significant given to the fact that the interest rates are rising and they're going to be 4% or so by the end of the year. So we should plan accordingly in terms of our trading and investing. So Thursday we saw job cuts was a little less than expected. Jobless claims was pretty much in line. a little higher than previous. Initial claims was less than expected though, so continuing was pretty much in line, but initial jobless claims again was less than expected. And again, all this contributes to the resiliency of the job market. So you can see US jobless claims tumbled to a 9-week low. Layoffs remain historically low. Although we're hearing continuing layoffs in the tech sector. So the tech sector is laying off, but the overall job market is remaining pretty resilient. So that says that people are still getting jobs in other industries, and some of these technology layoffs, these people may be getting other jobs very quickly in other companies that haven't laid off yet. So we also saw this manufacturing PMI was a little better than expected. Construction, the ISM was a little better than expected. And then we saw natural gas storage was up. So again, more natural gas in storage. Again, some of the news coming out late Friday, early this weekend is that Nord Stream 1 pipeline, Russia has no date for reopening it. So be aware of that. That may cause spikes in the natural gas price. So we'll talk about strategies for trading natural gas as we have for some period of time. So then Friday, we got the jobs data. We see average hourly earnings was down a little bit, but still high. So that's inflationary. Payrolls were better than expected. Non-farm payrolls were better than expected. And the unemployment rate went up a little bit. So, but again, all this pretty much says they called it Goldilocks, and the markets initially rallied a little bit on that data. But again, all this resiliency in the job market says the Fed can be aggressive, hawkish in fighting the inflation, and there's evidence that the salary rates will continue to contribute to inflation. So next we'll take a look at the economic data for next week. Just another quick reminder that the markets are all closed on Monday, September 5th for the Labor Day holiday. So hopefully you all will have a great Labor Day holiday weekend. And on Monday, just be aware markets are closed on Monday in the U.S. for the Labor Day holiday. So if we look at the economic calendar for next week for economic data in investing.com, and you can find the link in the notes, etc. We see Monday again is the Labor Day holiday, so markets are closed. Tuesday or on Monday, there is an OPEC meeting, so it will be important to hear what comes out of there. There's some discussion that OPEC Plus may cut production, and again, that may cause a spike in oil prices. So we want to hear what comes out of that meeting, and then on Tuesday or in the futures prior to Tuesday, we can see what effect that may have, if any. We get some PMI data on Tuesday, ISM data on Tuesday. Again, those are all potential inflationary factors, economic resiliency. How bad's the recession right now? Again, these are for August, so they're backward looking. Get mortgages again. Have some more Fed officials talking. Continuing jobless claims. So again, resiliency of the job market. We get, as typical, we get natural gas on Thursday. Also get some oil inventory on Thursday. So energy, watch energy on Thursday. Friday, we've got some wholesale inventory data. So again, that'll tell us about supply chain issues, etc. And then we get the rig count, etc. So a pretty typical week. Again, there's the Fed officials are now out. They seem to be reinforcing the Jackson Hole message, which they're going to be hawkish. They need to kill inflation, so that's their priority. And if that causes some damage to the job market, to the economy, their number one priority, again, is killing inflation. So we need to plan and act accordingly in our trading so we can continue to be successful in our trading career. Okay, let's talk about the major economic data that we received last week, and then we'll talk about what's in the upcoming week. And just as a quick reminder, please see the Surf the Market Reports channel in our Discord. You'll find a link to our Discord in the description box below, where we try to post near real-time economic data as it comes out. So you'll see as the economic data is released. Typically, I go to investing.com and I will copy out the results from that economic data as quickly as I can and post it in this Surf the Markets channel in our Discord, so you can quickly be alerted that it's what the results are and take a look. And then we'll talk about the implications, and we can discuss that in that channel as well. So again, I'd highly recommend you check out the Surf the Markets Report channel, join our Discord, and you'll get near real-time economic data that way. Okay, some further upcoming events to be aware of. Just a reminder, the next FOMC meetings are September 20 and 21st. So as that gets closer, we will be talking about how to position ourselves for trading opportunities given the various potential outcomes for the next FOMC meeting. Then you can see there's meetings in November and December, so we'll talk about those as they get closer as well. We quickly look at the earnings calendar for next week in investing.com. We see earnings is lightening up. We're getting towards the end of this particular earnings season. On Monday, we see DocuSign, some pharmaceuticals, some biotechs. Tuesday, see again a little lesser known technologies, not a whole lot significant. Wednesday, we got UiPath, that's a new tech. GameStop, that's obviously a meme. So watch for meme activity on Wednesday with GameStop. And be aware of if there's anything that would potentially impact any company stocks that you're looking to buy in the same sector. Listen to these earnings. They do matter. We've got Smith & Wesson on Thursday. Billy, Zscaler, some technology, some pharmaceuticals, some biotechs, and on Friday we've got Kroger, grocery. So again, be aware of who's reporting. Again, it's lightening up, so take a look at the earnings calendar and see if there's any potential impact for any of your stocks or any that you're looking to buy. If we continue our market analysis in the Markets tab of the online browser version of Webull, we could see in the histogram, majority declined on Friday, but the declines were relatively small, so kind of a long tail of decliners, just a large spike of very small decliners. If we look at the inflows, we can see the NASDAQ, had much more outflow than the NYSE. A little blip at the end of the day, but NASDAQ outflows were much more significant than the NYSE. Just a reminder, you can get a short-term earnings calendar and near-term earnings calendar by hitting the calendar tab earnings in Webull, so that can help you see earnings that are coming up very soon. If we look at the best performing industries, I'm going to look at it for the week. As we know, Friday was pretty much down. We see uranium, major bump in uranium. It had been beat down, so it turned around. Some of the ones we watched in the past, were all up. If any of you caught that turn and profited from those uranium stocks that we've been watching, congratulations to our fellow BeachBum traders who profited from those watch list items. And now, we can see they're all kind of run up. Everything else pretty red. Telecommunications was major red. Don't see a whole lot of green. So if we look at the ETFs, so we look at the market tendencies, down on the Dow, down on the S&P, bear, mid cap down, increased volatility, so up on the volatility, and down on the Russell. which again, not unexpected, and short on the FTSE. Look at industries, again, mostly red, except for energy, basic materials. Pretty much everything else was pretty red. Commodities, grains, gold, gas. Crane shares, I believe, is China. Grain, gold, cocoa. And then bonds and other, the 7 to 10-year bonds up, 15-year tips up, short-term bonds up. And then the futures will also see the currency. So